Alright, I'm going to keep this somewhat brief. So, really, today, not a lot to discuss. We opened, below this low, so there was a reasonable chance for a bull trend. We're trying to break below the trading range, gap down, did not gap strongly below it, so all signs. Plus, if you paid attention to what Al's been saying on his blogs, usually when we test up to an important lower high or an important low, such as, well, we tested back to the January low here, we went up and we tested back down. So we retested the February high here. However, we'll probably have to, in any sell-off, we'll probably have a retest. So that's kind of what's going on right here. So on grand scheme of things, what's more likely? We get a new all-time high or we break below here? Well, I think it's the second. So I think we'll get below here before we get to a new all-time high. For the bulls, so right now I would say 60% chance we break below here, 40% chance we get up to here. However, let's say tomorrow we get a strong bull bar, as big as this, closing up here, and then we get another bull bar. Well, probabilities will be more 50-50, and they may possibly shift for the bulls. Alright, so let's look at today. Coming into today, big gap down following a channel downwards. So you have a bear trend and then a pause and resumption. So you can see it, maybe something like this or even that. We've already clearly broken below that. So, if there's one key hint with today, look at the bars. Bars will always tell you everything everything you need to know. So look at bar 1. I'm actually going to zoom in just on this so we can really see the bars themselves. So notice here, bear bar followed by a bull bar. Strong enough bear bar for at least a second leg down. Bull bar looks like a doji bar, so not a strong entry. It's a low probability buy above, probably sellers above. Bear breakout, but doji, bad follow through. 3 dojis. Not good for the bulls, but not good for the bears either. This looks like a bear leg in a trading range. Well, what typically happens to bear legs in trading ranges? Well, eventually you get a bull leg and maybe even a bull breakout. So not good stop entries. They're dojis. If you think about trend bars, look like this and this, here, 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 even here and here. However, trends have consecutive bear bars. So, so through here we're always in short. However, if we break above this lower high, we'll probably become always in long, especially if we get a bull breakout. Reason why? I actually asked Al this question. You can find it in the go to his website, brookspriceaction.com. That's Brooks, BROOKS, priceaction.com. Click on the forums and ask Al, I believe. Anyways, or something, ask Al updates, wherever you can ask Al questions. And I was asking him just to make sure, I'm fairly confident that I'm right about this. Bear trend, lower highs, lower lows. When we break above a lower high, you it's either going to be a bull trend or a trading range. So here we knew one thing. We knew it's probably always in long, either always in long in a bull trend or always in long in a trading range. However, if you were listening to Al during the day, you've heard him say at the close of this bar, I'm not shorting. He even said he went short the scalp, and he said he's not going to buy at the moving average unless we get something like this. If this bar right here at 9:45 would have looked like this, we would have probably gotten a measure move up. This is, it's crucial to look at the follow through. This was a warning. It was telling us that we may get a deep pullback, and we may pull back all the way down to here. What's really interesting, and it happens a lot when you think about it, here is where we clearly, I think, started a bull trend. Once you see this close, you can probably say, yeah, there's a 60% chance I'll buy here. So I'll buy here, put a stop down here, and go for a measured move. Well, to me, whenever I take this trade, if I buy this close, I automatically, the first target I'll look at is the open, close, projected up. And as you can see, it's 850. Well, what I normally do is if I set my target 2 ticks below the measured move. So in other words, I'll give you 2 examples. I did not do this. I did not take this trade. But actually, I did do this. I bought this close and put my target at 8 o'clock, or 8 even, and price went to 825, which I think that happens a lot. So in other words, if I would have bought here and gone for a target of, the low to the open projecting up at 1375 is what it looks like. Excuse me, 1425. So the target here is 1425. I would have set my target at 1375, 2 ticks below. And, well, reason why is sometimes, to me, it's just not worth the deep pullback. Anyways, back to what I'm talking about. I think it was actually fairly likely we would fall below here. Reason why, whenever it's not clearly in a trend, it's in a trading range. What does that mean? Price will gun stops. In a trend, where's a logical stop? In a trend, it's these lines right here. You buy this close, stop down here, you probably won't get stopped out. Now, where's the better stop? It's all the way down here. Here, not a good breakout. I would not put a stop here. If anything, I'd put it a few points below here because of the risk of a double bottom and some sort of measured move up. This looks like a trading range. Trading ranges fall below support and reverse up. So where I'm getting at is, what does this look like? This looks like a trading range. Look to the left. We hadn't even broken above the moving average. We don't have 2 strong consecutive bull bars either way or bear bars either way. Excuse me, we don't have 2 consecutive bars either way. Big bodies is what I'm talking about. So this is a skunk trade. Putting your stop below 940 is it's a losing strategy. Reason why, you have traders, you have traders buying where you're getting stopped out. It's the whole concept of I don't like that. And now I can find a better example. It's kind of like this. You get a weak breakout. Since it's weak, stop probably better down here. That one ended up holding. Well, I don't want to spend too much time trying to find that. So, whole point, if you're buying up here, your stop goes down here, and you have to be prepared that we may fall below and you get stopped out. You have to be prepared to buy again. So, I really don't like to do that. For me, my preference is I want to see this. Personally, this is my favorite kind of trade. I think it's the easiest. An example would be here, and right here. I was not watching during this time, but it's the same thing. We're always in short from yesterday. Dojis, clearly got a bear breakout, clearly got good follow through. We're probably going down for a measured move. So you sell the close, stop up here, and the target is 1950, open to close. Well, I would set my target at 20 even, just in case. The reality is, if it's anything good, 2 ticks won't matter. And look what happened. Look at this is the reversal attempt. Terrible for the bulls. Tail on top, doji. It's probably going to fail. So, same thing. And well, just like here as well. Bull breakout at the moving average, but weak follow through. We may easily fall below the breakout and turn up. And look what happened. What's interesting to me is, let's see, 1850. Yeah, here's what's interesting. If you put your stop here, 1 tick below, you got stopped out. If you kept it at the low of the day, you would not have gotten stopped out, and you actually would have had a chance to get out around break even. So I wouldn't, logical targets. So until it's clearly in a trend, use the wide stop. Anyways, as I said, weak buying pressure. Look at the sell-off. The one thing I'm really paying attention to recently is just the pressure of the bars, and what I mean by that is Al talks a lot about it. What are the bars? Who's winning here? Well, the bears are getting strong bars, but no follow through. 3 bear bars, but tails on bottom pretty weak. We're probably going to touch the moving average. Bulls, 3 bear bars, good bull breakout. So right here, maybe always in long. It's either always in long or in trading range because we stopped out swing traders, if you will. Swing traders, they sell this, stop up here, new breakout, stop up here, new breakout, and theoretically they put a stop up here. However, I think it's a weak trade. This is likely a trading range, so it's musical chairs as to when we go above a lower high. So anyways, see a bull breakout. Next thing to do is to wait and see the pullback. Wait and see, give the bears a chance. And look what happened. Good signal bar, not too big. Body's not too big either. Terrible follow through. Bear bar, bull bar, bear bar, bull bar, bear doji, bear bar. So finally we're getting a bear breakout right here. And the bulls want this. The bears want this. Well, ask yourself. We're breaking out under logical support where probably traders are going to buy and they know they'll probably make money. We have a reasonable buy to close bar, and you can see what happened. 96.75, you bought that close. Look what happened. Price went 7 even, turned down. So, sorry if I'm talking kind of soft, kind of tired, and I just don't feel like yelling. Anyways, so we're probably going to have to test back up here. And the bears, if you're looking to short, I think the odds are you get a second leg. So I would wait to see what happens up here. I really would not be looking to short after this, especially after this. So, personally, I think you're better off, bulls are buying down here, betting on price at least getting back to here. Second off, as I just said, you have a reasonable target at the open of the day. And, well, of course we reached that. So look what happened here though. The character of the market has changed. We have 2 consecutive bull breakout and follow through. We're clearly always in long. We're probably going higher. The bears tried to get a double top. I know it doesn't look like a double top, but it is a double top. Whenever you have a, for instance here, bears tried to get a double top. We pulled back, we broke above it. Whenever we break above a high, you always have to think of it being a possible fail break of a double top, which it was here. So, once again, we're probably going higher. However, look at, good bull bar, weak follow through, big tail, inside doji, a breakout, and here. So this looks like a channel. It looks like it's trading range price action. Now, if you're selling, you probably need to stop up here, but I wouldn't look to do that. I would just be aware that we may pull back rather deeply. So here, where does the stop go? Well, I would not put the stop. The worst place is you put the stop here, because this arguably is the start of the channel. Channels evolve to trading ranges, so we may get a double bottom and measure move up. I'd put the stop all the way down here, maybe under here. Now it's a catastrophic stop. Think about it. Here, bull bar. Look at the sell-off. Weak bear signal bar, doji, bear breakout bar at the moving average. Bull bar will probably test up to here, so it's a good buy. However, here, if you're buying in here, stop all the way down here, maybe here. And then look what happened. Look right here. Very tight trading range. You can call it barbed wire, you can call it tight trading range. Probability slightly favors the bulls, but here's the issue. This happens all the time. Well, not really what I was trying to do there. If you're buying on a stop, then it's hard to make the math work. If you wait for the breakout, it's easier to make the math work. So here, look right here. Strong breakout. What are the odds we get a measured move? Well, probably pretty good, especially when you get follow through. And look what happened. We got the measured move. So you don't have to be in a rush to buy. Trading range, clearly bull breakout. And I know you can make the argument, well, it's the best part of the move, therefore it's probably exhaustion. And yeah, it might be. But the issue with that is we went sideways for, let's just find out how many bars, just for fun. By the way, if any of y'all have TradeStation, when you create a trend line, if you right click and format the trend line, go to go to labels, show bar count, it'll tell you how many bars. It's kind of neat. You can measure, for instance, price from here to here, 23 bars. So we've gone sideways for more than 20 bars. The bulls have had a chance to take a break. Probably won't be exhaustion. So we start to go sideways, another bull breakout, sideways for like 7 bars, another bull breakout, getting climactic, still, maybe forming a buy the close market, but forming a buy the close market up in here. However, we have the open of the month, a huge day. We may be trying to get so we have the low, a measuring gap, clear measuring gap. Arguably this is the bull, this is the channel. We broke above the channel, and we're trying to get that, which I believe we did at the Globex session. So let me just check. Clearly we got that measured move. You see, we got it right there. So anyways, that covers all today. Biggest advice I would say is, I know it sounds weird, but I think one of the biggest issues with trading is trying to make money. And what I mean by that is going into the mindset of that you have to make money at this moment, or you have to make money at this day. I've found a lot more success personally when I just try and follow along. For example, my number one goal every day, especially here recently, has just been to follow the market, follow along, understanding, why we're getting a bear bar, and then why are we getting weak follow through, another bear bar, and weak follow through, and weak follow through. It's a trading range. So, if I'm confused, or if I don't know what's going on, just sit out. Because all you need to find are these little moments right here. 2 bull bars, buy at the market, go for a measured move. Bear bull breakout, go for a measured move. Here, bear breakout, go for a measured move. You know. So yeah, I hope that makes sense. Really, all I'm saying is the better you can become at being objective, the better your performance will be. All right, that's all the time I have. Hope everyone has a good night.